All right, I am here with Zach Strickland. One more carrier update, my man.
Yeah, let's go through all of it. So tender volumes, tender rejections slightly down week over week. We're on this trend line of a slow decline in both. To start the month of October, not unusual for this time of year. However, it is slightly unexpected considering all the port backups and all the freight that still needs to be moved. But thinking about human behavior, natural tendencies, you just can't sprint around the track all the time. So a little bit of a breather here, I think, is what we're seeing. Nothing to think that this is going to end and we're all of a sudden going to see capacity flooding the market, et cetera. So one of the reasons I think this is the case is we're going to look at our next chart of import demand. So basically booking. So shippers who are booking freight coming from places like China and other parts of Asia, Europe, et cetera, coming into the United States, we're seeing a declining trend line for stuff that has about a 30, 40-day lead time of hitting surface transportation in the United States. However, this right here is the stuff that has cleared customs. These are shipments that have cleared customs, still extremely elevated because of all the congestion, et cetera. So even if it does slow down on this side of things where they are bringing all these imports in, this is stuff yet to arrive. This is stuff that has arrived and has cleared the port and is sitting in a container in a warehouse or at the port itself, more than likely right now. And that still has to be transloaded, et cetera. So a lot of pent-up demand. Even as this eases, you're talking about 60, 70 days before it has a real noticeable impact in the United States. And even then, the backlog and congestion is probably going to push it months into the future before you even start to feel this. It's also, still elevated. Last year was very elevated in import demand in itself. So we still have a lot of work to do here to clear this out before we feel it. But it does look like maybe January, February, we might see a little bit of a breather if nothing changes.
Yeah, the one thing I was going to note here, I mean, all signs are pointing to a strong holiday season from the consumer side. We don't know what next year is going to look like, but if it comes out a little bit slower, I mean, this is what I'm seeing here is inventories might build early in the year faster than we have seen this year. They could be able to get back to a point, at least getting close to pre-pandemic inventory to sales ratio sometime in 2022.
Right. Exactly. So, I mean, they may get a shot to get some of this cleared, and inventories next year, the big question is, did they overorder? All this freight. Did they order some of this freight thinking it was going to be here for the holiday season? Is consumer demand going to remain extremely strong and high into January like we saw last year? All big questions that have yet to be answered on this side of things. So let's go ahead and look at what the current capacity situation is in the United States real quickly. And as it pertains to the ports and all of that, you can see some of the darker blues are poised right around the port markets, but not to be ignored. The middle section of the country still extremely tight in terms of capacity. A lot of this stuff, if you just think about the flow of freight, carriers are focused, and you pointed this out, wisely last time, that carriers in some of these larger markets like Atlanta and Ontario, even though Ontario is blue, it's not the darkest shade of blue. And that's a good point. It's because carriers know this is where the freight is, and they're actively getting into these markets. They price themselves into Ontario more effectively than any other market in the United States right now. If you look at the spot rates, they're very cheap versus going the other direction.
Yeah, that and inbound tender reject index is like half headed out west than it is anywhere else. They want to be there. We know that.
Exactly. Let's go ahead and look at the next chart of some of these markets. So outbound tender volume index for the, probably the biggest port markets in the United States. Not a lot of changes here. However, if you look at the overall demand side of things, and again, these are total tenders, so you have to take into account some of the rejection rates here. But we're still seeing relatively strong volumes in all of our port volumes. Nothing's coming down. Elizabeth, New Jersey, pay close attention to this one right here. High elevated volumes, highest it's been since early part of the year.
Yeah, it could be having retailers. I mean, everybody's been going alternative routes all year. Could be, hey, we got to get this stuff trucked across the country. Might as well bring it in through Elizabeth, New Jersey so we don't have to go across. All right, Zach, thanks so much for your time and insights this morning.